Hi, I'm Ross from Coombsmith Chartered Accountants in Hamilton. I want to talk about a topic today. There's just so many people get this wrong or seem to misunderstand it. So I often hear this line: you can buy, do up and sell one property per year and it's tax-free, or something like that. You can buy 2 in 2 years, you can do them up, you can sell them and they're completely tax-free. Well, often that's not right. Tax law is complicated, but the general rule is if you buy with the intention of selling for a profit, then the profit will be taxable. So I'll say that again. So generally, if you buy a property with the intention of selling it for a profit, that profit is taxable. So say you already own your personal home, you see this great opportunity to buy the neighbour's place. You think, wow, that's really cheap, so I'll buy it, I'll do it up and I'll sell it. And even if that's your first property you've ever traded, you've never speculated, you've never developed in your life before, that property will be taxable because you've bought it with the deliberate intention of buying, doing up and selling it. You also need to consider, is it a continuous taxable activity and therefore liable for GST? There can be exceptions, especially around your personal home, but yeah, make sure you understand that general rule. If you buy with the intention of selling, then that profit is going to be taxable. And the same, a real common one that we get is if you subdivide. A general starting point for a subdivision is if you subdivide and then sell, it's going to be taxable. So make sure you're careful of these. There is, again, exemptions for your personal home, but you need to make sure you understand them and are careful around them. So in yesterday's article, there was a trading couple owe 1.7 million to IRD. After IRD inquiry, they volunteered that they'd bought and sold 16 properties in 2 years. So clearly this is liable to income tax, and it would also be a continuous taxable activity and liable for GST. Later, IRD actually found there was 40 properties in a period of time that they've traded, so again, clearly taxable. So what should you be doing if you think that you've traded a property? So if you think you've bought a property with the intention of selling, what should you do now? And the first thing is establish a clear timeline. Make sure you're crystal clear when you bought and sold every property and list it down. It makes it much easier for an advisor to have a look at it. And then the second thing I would suggest is get some expert advice from a property accountant. We offer a free 5-10 minute chat on the phone where we can generally establish, do we actually need to talk further, or are you absolutely fine and there's nothing to worry about? So maybe think about that. Give me, send us through an email or a message on Facebook, and we can organise that 5 or 10 minute chat and just have a basic chat and see, is there an issue that we need to work through further? Then what you can do if you think there is a problem is you can consider a voluntary disclosure for IRD, and that reduces your penalties. Another great trick is if you've done a transaction and you're not sure whether you should return it or not, a really safe option you can do is return it with your tax return. And then as soon as you've filed your tax return, you issue a NOPA to IRD, so Notice of Proposed Adjustment, basically saying that you've incorrectly returned that income and you want to take it out again. So that's a no-risk approach. So you return the income with IRD, they're happy, and then you're asking them to take it out again. So if they agree with you, they'll take that income out, and there's no penalties, no interest or anything like that. If they disagree, then it's still in the income, and you can still obviously argue further as well. So that can be a really good trick. With today's technology, I would just be careful with what you are disclosing to IRD. It's so easy for IRD to track what properties you've bought and sold. So if you think that you have bought and sold a few properties and you think there's a problem, it's better to address it now. Like I said, do the timeline, get some expert advice from a property accountant, and hopefully you can sort that out. We've also got quite a lot of information on our blogs and on our website, so make sure you sign up to our newsletter, as there's some great information on there that will help you too. Thank you very much.